Guys, it's Monday, November 13th. We're here for another real estate weekly warm up. Big things happening. Rates are falling. Now, I don't know if it's going to last forever. I don't know if it's going to be a precipitous thing, but the good news is if you're out there shopping for a house and you're working with a loan officer or a bank, lock that rate in. They've gone from about 8% down to 7.4%, the lowest they've been in the last 3 months, which is very exciting for all of those buyers out there, anyone who's looking to become a buyer. Now, remember, we're talking about interest rates for single family homes that you're going to be an owner occupant of. All other interest rates follow and start to fall as those rates fall, but they're ultimately not going to be as low. When I mean by other interest rates, I mean non-owner occupied investment properties. Now, in addition to that, because interest rates have started to fall, you started to see an uptick in how many buyers are coming into the market. So we've seen a 3% increase in loan applications over the last week. What that means is that more buyers are coming in and trying to take a swing at buying a house. Now, what's also been happening in addition to those increased numbers of buyers is there's been an increase in listings, guys, about 1.5% across the United States. So what the beautiful thing is we're getting more buyers to come in. We're also getting more properties to come in. What's that called? That's called stable real estate. What you'll hear from a lot of people out there is only one side. Oh my God, there's more buyers coming into the market. Prices are going to continue to skyrocket. Or, oh my God, there's more real estate or properties coming on the market. So we're going to start to see this crash, right? We need to have both sides of the equation or see both sides of the coin in order to understand what's really happening. So right now, things are beautiful. Buyers are coming into the market. Yes, 3% buyers, but not all of those buyers are going to qualify for those mortgages, plus 1.5% increase in properties coming onto the market. So we see an even level playing field to hold prices very steady. One thing that we are seeing again is we're starting to see about 7% of the sellers in this market that have a home listed dropping their price. Now, me personally, I don't think that that's anything to worry about. I think that the 7% or 8% that are lowering those prices just got greedy. They saw what their neighbor sold for 6 months ago, and they're trying to sell their home today for that same price or even higher than that same price 6 months ago. And they're just getting that reality check. Like, holy shit, I had FOMO, should have sold it 6 months ago, didn't, can't get that same price. So they're just bringing that home back into a price point, which is actually realistic for today's market. I don't think we're actually losing value. We're just resetting the market based on expectations, guys. So that's where we stand today. Another thing I wanted to share, I've been getting this question a lot, is John, with interest rates, how can we successfully buy rental properties? Because with higher interest rates, higher prices, our cash flow gets killed. And, one thing I like to tell people is, owning a property today is better than owning a property in 3 years. And the reason why I say 3 years is likely that's how long it's going to take for interest rates to get back in that 4 to 5% range, especially for us as investors that are buying rental properties. So what that means is that we buy a property today. Maybe we're not going to get that $200, $300, $400 a month in cash flow per door, right? Because interest rates and prices are so high, but interest rates are not going to stay high forever. Let's say we get $50 to $100 a door, and then we take this 8.5% interest rate, and in 3 years we refinance it to 4 or 5%. We've gone from $50 to $100 a month to $300 to $400 a month. So this is where we've gained our cash flow. But cash flow, as we know, is not the only profit center for owning rental properties, right? We have appreciation, we have depreciation, we have our tax benefits, we have our equity pay down from our renters. We have all of these different ways that we can make money from owning real estate. So don't be so stuck on the cash flow piece. Now, should you have cash flow? Should you be comfortable with that cash flow? Absolutely. Don't ever buy an alligator property where you're needing to pay into that each and every month. What we always want to do is buy a property that's cash flowing, but we don't need that big fatty number to make it make sense. Allow yourself to collect a little bit cash flow, cover all your expenses, and know that in 3 years, you're going to be better off, even if you only collected $50 a month, because you've made money from all those other profit centers, and you can just refinance at that point in time. Besides, what other people are doing is like, we'll wait 3 years, and then you're going to be jumping into the deep end of the pool with 100 other investors trying to buy all the same houses with lower interest rates, right? Take advantage of less people in the market trying to buy right now and sacrifice for that lower cash flow so you can have more cash flow in the future, guys. So that's my 2 cents to answer the question, how are we buying properties right now in this marketplace with the higher interest rates and prices? Other than that, guys, as always, have a great start to your week. Happy investing. See you next week.